It really wasn't that long ago that Ola Electric felt, well, unstoppable. They were the poster child, right? The absolute king of India's big EV push. But wow, things have changed. Today, the company is staring down a massive crisis, one that's got everyone from investors to the folks who actually bought their scooters seriously spooked. And this number, this says it all, minus 80%. That's how far the stock has plummeted from its peak. I mean, just take a second to let that sink in. This isn't some minor dip. We're talking about a catastrophic collapse in value, a real wipeout. So the big question is, how on earth did it all go so wrong so fast? How does the darling of the Indian EV scene end up here? Well, that's exactly what we're going to unpack. Let's dive right in. All right, first up, the poster child falls. We're talking about a journey from undisputed market leader all the way down to market laggard. And look, to really get a sense of just how staggering this fall is, you have to remember just how high they were flying. I mean, check this out. Just a little over a year ago, Ola Electric basically was the Indian EV scooter market. They had nearly 50% market share. 50%! That means if you saw two electric scooters on the road, odds are one of them was an Ola. They were the default, the name everyone knew. And then this happened. The sales just fend off a cliff. Look at these numbers. In just 1 year, sales cratered from over 29,000 scooters in a month all the way down to 8,400. That is a massive 71% drop. This wasn't a slowdown. It was a full-blown collapse. And what was the result of that sales cliff? Well, they plummeted from number 1 in the market all the way down to 5th place. Suddenly, they were trailing behind the very same old-school legacy brands like TVS and Bajaj that they were supposed to make obsolete. Talk about a complete reversal of fortune. Okay, Section 2, Anatomy of the Crash. We're looking at a perfect storm of operational failures. So what exactly caused this spectacular flameout? Well, it wasn't just one thing. It was a whole bunch of problems that really all stemmed from one single critical mistake. And that mistake can be summed up with this idea: the broken flywheel. Now, you know how a flywheel works, right? In a healthy business, success builds on itself. More sales, more happy customers, more good reviews, which leads to more sales. It's a beautiful, positive cycle. But at Ola, that flywheel didn't just stop. It shattered and started spinning backwards violently. So here's exactly how that negative spiral worked. First, their rapid sales completely outpaced their ability to actually service the scooters. You can't just sell tens of thousands of vehicles and not have the infrastructure to fix them, right? This led to huge service bottlenecks and, you guessed it, tons of really angry customers. That frustration spilled online, and the negative word of mouth went viral. And the final step? New customers saw the horror stories and demand just collapsed. And this wasn't just a few angry tweets. It got so bad that the government had to step in. The Central Consumer Protection Authority issued a formal notice, citing over 10,000 consumer complaints. When the feds are knocking on your door because of that many unhappy customers, you know you have a catastrophic problem on your hands. So, of course, investors were watching. All these operational failures made them completely reevaluate the company. That special tech premium they had, the idea that they were a fast-moving software company on wheels, not just a scooter maker, poof, it was gone. Suddenly, they weren't the next Tesla, they were just another hardware company that couldn't get its act together. And when you dig into the numbers, it gets even more stark. I mean, you might glance at the price-to-sales ratio and think, hey, it's not so different from TVS or Bajaj. But here's the kicker. Ola's ratio is for a business where revenues are shrinking by a whopping 43%. Their competitors, they're actually profitable and growing. It's a totally different story. The market is basically screaming that an Ola dollar of revenue is worth way, way less than a TVS dollar. Which brings us to part 3, the 2 possible futures. This has really become a high-stakes binary bet for anyone watching. So with all this chaos and wreckage, what happens next? Well, it seems like there are really only 2 paths forward, and they could not be more different. Yeah, this is what you'd call a classic binary outcome. There's not a lot of middle ground here. On one hand, you have the bull case. They pull off a miraculous turnaround, fix their tech and service, and the stock could easily double. But on the other hand, you have the bear case. The problems just keep piling up, they burn through all their cash, and the stock could fall another 70 or 80%, basically becoming a cautionary tale for the ages.
So, really, is there any hope left? I mean, can they actually pull out of this nosedive? Well, the companies certainly think so. They have a plan, a three-step plan they believe can turn this whole ship around.
Okay, so here is the playbook for the comeback. Step 1 is the 4680 Bharat Cell. The idea here is to get a huge cost and tech advantage by manufacturing their own batteries. No more depending on suppliers. Step 2 is the Roadster motorcycle. They want to jump into the huge, basically untapped electric motorcycle market. And step 3, and this is arguably the most important one, the Hyperservice reboot. They have to, absolutely have to, fix their service disaster and rebuild that broken trust with customers.
But, and this is a big but, the road ahead is filled with landmines. You've got intense competition coming, with giants like Honda finally getting serious about EVs. They're still burning through cash like there's no tomorrow. Their track record on execution, hitting deadlines, it's not great. And to top it all off, there's a lock-in period ending soon, which could flood the market with a ton of shares and push the price down even further.
All right, let's bring it all together in our final section, the final verdict. It's time to understand what Ola Electric has become. When you stack up that potential for a comeback against all those massive risks, what kind of company are we even looking at anymore?
And here's the new label. It's a distressed turnaround stock. That's a huge shift. See, it's not a growth stock anymore. You're not betting on an unstoppable rocket ship. A bet on Ola today is a high-risk, high-reward gamble. It's a bet that a company with some very, very serious problems can pull itself back from the brink. And really, when you boil it all down, it comes to this. An investment in Ola Electric right now is a bet on one person, its founder, Bhavish Agarwal. It's a bet that he can pivot. A bet that the guy who is brilliant at hypergrowth can now become brilliant at operational excellence. And believe me, those are two very, very different skill sets. So, what's it going to be? Will this go down in the books as an incredible story of resilience? A legendary comeback? Or will it just be another cautionary tale of hubris, about a company that grew too fast and flew too close to the sun? Honestly, the next year is going to tell us everything. The final chapter is far from written.